Hello all, and thank you for being here, even though it's a Saturday and it's 10 a.m. So yeah, we really appreciate the interest. It seems that regulation is actually a more interesting and relevant topic for the people here that we taught yesterday evening. And I'm really glad to have this great panel here, so I will go straight to the chase and start asking questions so that we will have also time for you to ask your questions after our discussion. Just before I forget, there are two mics between the chairs. You can use them to ask your questions afterwards. Just go there and they will be switched on. So thank you for joining us. Thank you for coming to Bulgaria, those of you that aren't originally from here. So Jonathan, I'll start with you, because you are, let's say, quite informed about MiCA. That's the Marketing Crypto Assets Regulation for those of you that aren't familiar, and that's the big topic for this year. I would say if crypto had a Chinese calendar, this year would be the year of MiCA. So Jonathan, please tell us about MiCA and basically what now the crypto asset issuers, offerers, and the services offering crypto asset related services will need to adapt to, and basically what all of us as an industry will experience.
Certainly. Thanks, and good morning, everyone. Thanks for the invitation once again. I like to split MiCA in half when I talk about it and describe it. So you have the first half, which covers issuers, those doing offers to the public, and those seeking admission to trading of crypto assets onto trading platforms. And then you have the second half, which talks about and covers crypto asset service providers. Now, we've already seen one part of MiCA becoming applicable earlier this year in relation to stablecoins. That is, e-money tokens, so stablecoins that reference one official currency, like USDT and USDC, and also asset reference tokens, which essentially are a catch-all category for stablecoins, and therefore they are stablecoins which reference an asset or a basket of assets or even a basket of official currencies. The proper definition is that they reference or stabilize their value rather by referencing any other asset, value, or right. And this, in my opinion, includes certain crypto assets like wrapped tokens, but also, for instance, crypto assets that reference the value of gold or commodities. So far, we haven't really seen that much of an effect in terms of the applicability of the first part of MiCA. We've only seen a handful of issuers who decided to, let's say, obtain the necessary regulatory approvals under MiCA in order to conduct an offer to the public of their stablecoins, and most notable one is Circle. And the reason for this is because only those issuers who are looking to conduct an offer to the public or seek admission to trading of their stablecoins need to be authorized in compliance with MiCA. There is often the use of the term MiCA-compliant stablecoins, which I think is a bit of a misnomer, because in reality, there is no such thing as a MiCA-compliant crypto asset. If anything, it is the issuers which would have to be compliant with MiCA if they do an offer to the public, or otherwise they want to have their token admitted to trading, listed for trading onto a trading platform. Now, there's a lot of debate going on what it actually means to offer a crypto asset to the public. The definition of a crypto asset, of an offer to the public, is essentially a communication in any form to a person which has sufficient information on the terms of the offer and the crypto asset being offered so as to enable a prospective holder to decide whether to purchase it or not. So it's not just any communication, it's not just any, let's say, document. It has to be a document which has terms of an offer, information on the crypto asset, and enough information to allow someone to decide whether to purchase it or not. So in my opinion, if you're simply issuing a stablecoin and you're not really offering it to the public in the Union, being in the European Union, the European Economic Area, chances are that you would not really need to seek authorization under MiCA. So that's with respect to stablecoins and let's say general concept, or the first half rather, of MiCA that I was talking about. CASPs, on the other hand, I believe that if they really want to continue having a foothold in the European Union, then they must seek authorization under MiCA. And one of the main challenges that they will face is that most, let's say, entities which are aspiring to be CASPs so far have only been regulated under an AML registration, which I believe is also the scenario here in Bulgaria. And an AML registration is a far cry from a MiCA license, where for all intents and purposes, a MiCA license is very much equivalent to holding a license as a financial institution. You have prudential requirements, strict governance requirements as well, operating rules to have in place, a lot of other procedures, like even complaints handling procedures must be very detailed, and there's a whole section dedicated to them in Title 5. So all in all, we're talking about a very different setup that service providers must have in place in order to be licensed as CASPs. And I very much fear that there's a lot of service providers out there which are perhaps not fully aware of how big of a jump this will mean. And, once again, this is my opinion, I think we'll only see very, very few CASPs actually being licensed in the first quarter of next year, both because of this, let's call it even perhaps a bit of apathy or unawareness, but also because most national competent authorities, this will be their first time actually undertaking a crypto licensing process from their end, and I do suspect that most national competent authorities are not yet that well prepared. So that's by way of a bit of a brief overview of, let's say, MiCA and some of the challenges that we might be facing. So, yeah.
Spot on. Thank you so much, Jonathan. And I will step on what you just said and confirm that indeed in Bulgaria what we have had so far is a registration under our local AML law, which there was this discussion previously in the crypto lawyers community, some saying that, okay, this would not be enough for the so-called grandfathering clause under MiCA to be effective. Basically, the grandfathering clause would allow projects to still operate and provide services within the member state where they have had this previous registration. So some experts, myself including, I have to admit, were saying that no, this AML registration is actually not enough to fulfill also what Jonathan said. But then the European Securities Markets Authority published a Q&A on their website. So the European Commission actually said, okay, we agree with whatever the member state had decided is enough. So this, even if it is an AML registration, it would also be relevant for the application of the grandfathering clause. So now we have the same system. However, there is quite a lot of uncertainty, and I'm slowly moving to my second question to Diana by saying this around how the grandfathering clause would actually work, because theoretically, all projects that have such registration by the end of this year would then have the opportunity to work within the frames of the grandfathering clause, not as a crypto asset service provider, that has already been clarified by the Commission, but as a VASP or whatever the name is locally, and provide services within that member state. But a lot of national competent authorities actually say we are facing a lot of uncertainty around the crypto asset service provider registration, so we are halting any future and current registrations under our, for example, AML framework, so that we are certain that whatever is going to come in the next months would be MiCA compliant and a CASP, and not just registered under whatever is currently applicable. Cyprus is such a case from a few days ago, and now other national competent authorities are also evaluating this. And now this brings me to the question to Diana, because I know that you are currently in the process of getting authorizations that are MiCA compliant authorizations, broadly speaking. So if you can share more about your experience, how is it like for you, especially if you can share experience from different member states, that would be interesting.
Sure, thank you so much, Vyara. First of all, I would like to thank the organizers of this conference, Vlad, Tina, and Albena, for organizing this conference in Sofia, because we don't have many events of this kind in Sofia, definitely. And also special thanks to Vyara for organizing a regulatory panel on this conference, because most of the crypto conferences I go to, they usually focus on very technical aspects of crypto, and very few people actually speak about regulation and compliance, which I think is very crucial for the whole crypto industry. I've been presented as an ex-regulator and ex-UK Parliament advisor, but I've actually been cooking in crypto compliance in the last 5 years. When I joined Crypto.com as a very small exchange, we started our compliance program back in 2019, when centralized crypto exchanges were not even under obligation to do any AML KYC checks. So it was wild, wild west, if you remember, back in 2019. But what we chose to do at Crypto.com is actually to start introducing compliance program early on, because we had the long-term plans to develop, to sustain our business. And we basically built it into our DNA from the very early stages. And it paid off, because Crypto.com is probably now the most licensed and regulated crypto exchange in the world. It's got the best crypto compliance program, AML program, data privacy program, cybersecurity program. So I spent around 3 years building this program at Crypto.com. Then I moved to another exchange called BitGet, which is very famous for being an ambassador of Lionel Messi, if there are football fans out here. So I built for them compliance program. And right now I work for a software development company, because I decided to change the course a little bit. And I work for Alliance Block Foundation. Alliance Block Foundation actually have few companies within its ecosystem. One of it is software development company, which was called Nexera ID. We developed a software product for compliance officers, and what really caught my eye when I was joining, coming from centralized crypto exchange to a software development company, something we struggle as compliance officers. We use a lot of different tools, like we have at least 5, 6 different softwares we have to use in our day-to-day job. From KYC software, AML screening software, then you have transaction monitoring, on-chain, off-chain, you have suspicious activity reporting, and it's really hard to bring this information all together, so we as compliance officers do a lot of manual work. So when Nexera ID approached me and they showed me their product, I was actually quite impressed, because what they do, they combine and aggregate all those tools all in one place for you, in one nice, beautiful dashboard with beautiful insights and statistics about your customers. So I joined to help develop the best product on the market. I work with them right now, but I also work with other companies within Alliance Block Foundation to help them apply for licenses, because we have companies who are in real-world asset tokenization, we have self-custodian wallets. And also going back to Crypto.com, when we were applying for licenses across the world, and we probably got VASP registration in every single EU member state. Like Jonathan just mentioned, VASP registration is nothing like a real license, so it's very easy to get in some jurisdictions. But in other jurisdictions, they made it like in a full-scale license. I remember when we had to apply in UK FCA for a VASP registration, it just felt like a real license. You had to wait for it for 1 year. I compared it now, we applied recently for VASP registration, or sometimes they call it AML registration as well. In Bulgaria, it took us 1.5 weeks to get VASP registration here with the National Revenue Agency. So there's a huge variation in this AML registration across Europe. I also applied in Poland, I remember. It took us about a month, so yeah, definitely. So from 1 year to 1.5 weeks, you see huge variation in how different national competent authorities introduce those VASP registrations. So I'm looking forward to see how it will develop with MiCA as well, I know, because we already start preparation. I'm helping 3 companies to apply for MiCA license, so we're preparing a licensing pack. And I know, so one company is in France, another company is in Netherlands applying, and one company in Bulgaria. So, and I see within those 3 different companies, I see huge variation within those jurisdictions. So in Netherlands, the National Competent Authority, the IMF, opened the application window.
IMF is in France, but
yeah. IFM, yeah, IFM in Netherlands. So they open application window back in 22nd of April. So you can apply basically for MiCA license since 22nd of April, if you're ready. In Bulgaria, we don't have application window open yet, so we don't know when it's going to be open, how it's going to be open, what the requirements will be. In France, they had something called DASP regime, which was very close to MiCA. So basically, if you have a DASP license, you can easily switch to MiCA. So again, there are variations how you approach MiCA license in a different jurisdiction. But I wanted also to focus, because there is a lot of things being said theoretically about MiCA, pros and cons, is MiCA good, is MiCA bad. As an ex-regulator, I always welcome good regulation, and we know why do we need regulation. We see in industry regulators as the bad guys, right? They come, they fine us, they introduce rules, we have to comply, we have to spend lots of money on compliance, we have to hire expensive chief compliance officers. But actually, if you think about regulation, why do we need it? Regulators, the main objective of every regulator is to protect consumers. And who are the consumers? Consumer is me, consumer is you, Vyara, everybody in this room is consumer. So the main objective is to protect us from consumer harm. So we don't have companies like OneCoin coming and taking all our money, all our life savings, and running away and disappearing to nowhere. You don't want to fly airplane if there are no airline regulation. And I think a guy from Binance yesterday, the director of Binance France, actually brought this very nice example. He said, if we didn't have airline regulation, I wouldn't feel safe to go in the airplane because I don't think that it's safe to fly. If there is no drugs regulation, we don't know if it's safe to use the drugs. The same in financial services. We need regulations to know that we operate in a safe market. We don't want our bank to come and take all our money from our bank account. So coming back to MiCA, in terms of more practical advice, I would say, companies who are applying to MiCA, it's very serious regulation. You have to be very well prepared. You have to put your house in order. It's not only your AML compliance program. There's much more to that, and what I see companies are struggling with is business plan. You have to prepare a very good business plan. You need to understand what are these products and services you're offering. And very often companies can't even describe it in their business plan clearly. If they can't describe it, how does the regulator supposed to know what is it that you're offering? So clearly written business plan, all your policies and procedures in place. And I'm not only speaking here about anti-money laundering policies, conflict of interest. There are also data privacy issues that regulator is looking quite closely in. Are you compliant with GDPR? Is your cybersecurity in order? Are you able to protect your consumers from hacks and all other cybersecurity threats? So all of this needs to be taken into account. It's not scary. Regulators are not scary. They're there to help. And I've seen it quite often in the case, where companies said, no, we're not going to contact regulator because we'll be on their radar. They're actually investing a lot of money. Even to introduce one regulation like MiCA, they have to spend huge amount of resources. It's a cross-departmental effort to introduce this kind of regulation. So they're there to protect us. They're good guys. They're not bad guys. So if you have, of course, any questions in terms of practical, how do you apply to MiCA, how do you approach different regulators, even VASP registration, we'll be happy to answer after this panel.
Yeah.
Thank you. Yeah. Sure.
Yeah, so...
Is it? Oh, yeah, it's right.
Yeah,
Sorry.
go for it.
Just to add, however, that let's not kid ourselves. The main scope of MiCA was to stifle stablecoins, or the explosion of stablecoins, rather. It was never about consumer protection, I can tell you that. It was about actually making sure that the Libra project did not take root in the EU, and even like members of the European Parliament, the European Commission say this as well. So that was the first and main reason why MiCA was created. I think consumer protection came as a bit of an afterthought to sprinkle some, I would say, stuff on the cake to make it look good. But
always good to be able to add arguments to a decision, yes.
Can I just...
Go for it. You also have... Go for it.
Yeah, I heard a really nice thought from Peter Kerstens, who is touted as the father of MiCA. He said, MiCA is for the dedicated, not for the curious.
I don't know if you have, and this would be my last addition before turning into the scripted conversation, but the story of MiCA, basically what Jonathan also touched upon, was Libra, like then Facebook, before Meta, after deciding to create their own stablecoin, they created a foundation, and they decided to go to the EU and present this project. And so they went on a few meetings, went to the Commission, went to the Parliament, and basically said, yeah, listen, the financial system in Europe is completely messed up. So we're here with this project of ours to fix it. So basically the reaction then was, yeah, we need to regulate this right away. So that's indeed the genesis of the regulation.
They were not wrong. The EU system is a mess. So, I mean, they were not wrong when they said that, but...
That's absolutely true, but they can also talk to the EUCI for like maybe working on the message. But with that being said, I want to go back to the broader picture. We already talked about the EU. We touched upon the EU, but what I want to kind of bring you in the conversation by asking you to share a bit more of your experience from the US perspective, particularly when it comes to litigation towards like written legislation and all those little differences that the US has when compared to the EU. So yeah, all that you can share.
Yes, sure. As always, like a quick disclaimer, I'm not a US lawyer and I'm not your lawyer. So anything I say is for informational purposes here. The US has a very, let's say, a bit of a different approach. Many in the crypto industry say it's like regulation by enforcement. And this is, to an extent, very much true. It is regulation by enforcement. The thing is, like, I think it was said like recently by one of the high judges there that actually this area of law is gonna remain a judge-made law. It's not gonna get a legislative bill that is gonna sort it out. And I'm gonna touch upon this a bit later, but there is a legislative bill right now that is being in the process. It's called FIT 21. But yeah, right now this this whole situation in the US is kind of a judge-made law, so it's based on precedent and different cases with sometimes different results, which are at some point going to be unified by the highest court. The thing is, the regulator there, I mean, the whole environment there is a bit hostile with the current administration, which might change in the future, because we have seen some signals for that. Trump, for example, says he's very crypto-friendly, and also, yeah, generally, we are expecting some changes. Like, whoever wins the elections, most probably the current head of the Securities and Exchange Commission is going to be changed. So there is going to be a bit of a change in policy and how the US approaches kind of this matter. And maybe there is going to be a change in whether they are going to continue going after projects and protocols for just lack of proper registration. Because there is a line there, like there are more serious offenses, like if you do like a fraud or something really terrible. And there is also like if you just didn't register, which as far as I know is very difficult to the point of probably impossible to do. But yeah, in any case, it's maybe there is going to be a slight shift, and maybe some projects are not going to be pursued for, like, let's say, minor administrative offenses, or that's what most of the crypto projects hope for. In terms of the current situation, very hostile, very aggressive. I heard 50% of the judges in the US think that crypto is a scam, a total scam. So imagine just being dragged into a US court and like you have 50% of a judge that is going to hate you. It's terrible. Like then you don't want to get into that situation. So yeah, the authorities there, like CFTC and SEC, are quite active, especially the SEC. I think they have like maybe 200 active cases. Even though things are slowing down right now because of a few things. First, the elections. They don't want to be too active before the elections. And also because of the financial year. Like it ended in September for the SEC, for example. So they closed whatever they can and settled so they can get the money and bonuses. And now they are going to be slowing down a bit, from what I've heard. Like, of course, I'm not a US lawyer, as I said. Yeah, so they are trying to throw in arguments and trying to see like what is gonna stick. One of the theories that they were trying to throw out is that all tokens are kind of securities, and now they had to actually apologize in a footnote in one of the court cases because actually they said that, yes, we're sorry for the confusion we created. It's not exactly that tokens are security, it's that those tokens are offered as an investment contract, and therefore they are actually a security. So, and this is like how they actually prosecute and try to go after projects. It's always based, almost always based on the so-called Howey test, which is an old precedent that established the definition of an investment contract. And most of the tokens, if they hire a chief marketing officer, they're probably ticking all of the boxes already to be an investment contract in a nutshell. Yeah, there are some changes. It's really interesting. Like, I think, and even after if they approve this new law, FIT 21, thing is, like, for the foreseeable future, it's going to continue to be on a case-by-case basis. And this is also good and also bad. Like, this means that you at least have a chance to stand on if you get a good lawyer, and also if you are doing things somewhat properly, you have a chance actually to win your own case. And with the future, I think the FIT 21, once it's approved, there was a lot of hope there. I wouldn't be too hopeful. It's going to sort out a few things. It's going to probably make one of the main regulators the CFTC, and CFTC is friendlier than the SEC. So this is going to be a change. And also they say that FIT 21 is like MiCA-like regulation in a way. And also they say that there is like some sort of a threshold for decentralization. Like if no one, for example, holds more than 20% of the tokens, they say the project is decentralized. So it's definitely a step into the right direction of getting some clarity and not relying on like court cases for enforcement and which creates a patchwork, and it creates unpredictable results, which is, of course, as everyone says, not good for the economy. Projects are going outside. But yeah, if they come to Europe, we would be happy because there is going to be more work for European lawyers.
Yes, thank you for bringing also DeFi into the picture and into the discussion, because that's definitely something that I want to focus on for at least a big part of the remaining time in this panel. So, Svetlin, I'm going to now point the limelight towards you by going back to MiCA and going back to something important, which is that MiCA currently in its somewhat infamous Recital 22 excludes from its scope decentralized projects. However, no one is really sure what that means in practice. So, Svetlin, I know that you have analyzed what recently came out from the Danish authority when it comes to evaluating decentralization under MiCA, and basically if you can share also some practical examples of how that would look like, then we can open the discussion around DeFi also for the rest of the panel.
All right. Well, the single recital of MiCA that addresses decentralization, Jonathan, correct me if I'm wrong, this is recital 22? Yeah. It says basically that the regulation should not apply to a project that is sufficiently decentralized. Well, when I first came across with this provision, I searched for extra content similar to other people in the space, but didn't find anything else more than that. So the safe harbor that the projects, in particularly DeFi space, should rely on is encapsulated in a single recital. Clearly, this is not sufficient. And here comes the Danish Financial Authority examination and briefing that they published earlier this year. They intend to explore the matter further and make some presentation to the public around their thought process, how they intend to evaluate decentralization. Of course, nothing in this paper is set in stone, nothing is established as clear framework that companies established in Denmark or other member state-based projects should adhere to, but it helps us a lot to follow the direction and see how the competent authorities would tackle this topic. One of the core components is the lack of, well, for them to assess decentralization, they introduce the first necessary item, lack of any sort of concentrated control over the project or the protocol. Further on, they examine the technical decentralization and the governance decentralization. In my view, the assessment of technical decentralization can be more clearly handled at this point. At least they signal that they expect the smart contract, the set of smart contracts. Of course, we know that there are group of contracts that operate behind any of the native DeFi protocols. So they expect these contracts to be autonomous, to be self-executing. They would look into the contract architecture and they would examine if there are any embedded rights into these contracts. For instance, if there is a payment stream directing to any of the core contributors, that can be pointed as a potential centralization vector, I would say. As for decentralization assessment, I view here a decent overlap with MiCA classification of tokens, because the Danish authority would examine not only the token type by its definition by the protocol, they would look into its particular design, and they would assess if there are any rights beyond giving more power to the token holder beyond the voting capacity. For instance, if the token gives the token holder a right to claim future profit out of the protocol. Another vectors that deserves our attention are how the voting process is organized, what voting systems are used, whether there is delegation of voting power that can also establish the precedent of concentration of this power within the hands of few. Basically, the regulator cares about these scenarios where many entities, no matter individual persons or legal entities, may accumulate voting power in different ways, and this dictate the development of the protocol. Of course, if they, if the competent authority comes to such a resolution, the claim of the project that they are decentralized by design might not be sufficient. Then, theoretically speaking, of course, the regulator may enforce some actions against this project for not being in compliance with MiCA. These are expectations based on this circular brief published by the authority. I can get to the more practical examination later, but I can now leave the floor to other attendants to discuss this.
Any comments already on the Danish paper? And basically, because something that I don't think you touched upon was the front ends question. So I know, Jonathan, that maybe there is a thought about that.
The Danish FSA paper did make some valid points and some perhaps incorrect points as well. So briefly, there were some, I would say, important points, such as if a smart contract's logic is upgradable, therefore the smart contract is not renounced, then whoever holds the admin keys and can potentially change the logic of the smart contract could potentially be within scope of MiCA if, of course, there's a provision of crypto asset services and the definition of a CASP is met. However, when it came to, let's say, their interpretation of online interfaces, where they somehow seemed to hint at the fact, or at least their interpretation of the fact, that most online interfaces, most front ends of DeFi rather, would be within scope, there I would strongly disagree. And the reason for that is because the definition of an online interface is quite clear. It has to be, first of all, operated by a CASP or by an offeror, or on behalf of an offeror or a CASP. But, and this is the important part now, the front end must serve to either give access to holders to their crypto assets, or otherwise give access to crypto asset services. Now, most front ends in DeFi do not serve to give access to holders to their crypto assets. The crypto assets are stored on the blockchain, and if anything, you access them through your private key, not through a front end. So that already excludes quite a lot of, I would say, DeFi front ends out there. Secondly, as well, in order for a front end to give access to crypto asset services, there must be a CASP in the first place, offering those crypto asset services. And most DeFi protocols, or rather, let me just reword that, some of the major DeFi protocols are not CASPs. We're just talking about a protocol, a set of smart contracts. You can choose to access them directly or through a graphical user interface, being the front end itself. That's all there is to it. Nothing more, nothing less. So on that particular point, I did strongly disagree with the interpretation of the Danish FSA because I think it was too wide and really and truly, in my opinion, not based on the letter of the law, which again, as I said, is quite clear in that it has to actually serve as a gateway for users to access their crypto assets rather than just any graphical user interface.
Great. Any other thoughts on that interpretation? And maybe you can then give the practical example as well.
In fact, they leave the door open to more broader interpretation, saying that the company that is offering this gateway may not be classified as a licensable entity if it's not in direct control of set of smart contracts. However, how this will be applied in practical terms, it remains to be seen. What we at Llama Risk did is examining curve protocol and curve governance as per these criterions, the current criterion set by the FSA. And we issued a recommendation. Of course, we don't act as any solicitor or legal advisor to Curve. We are independent risk organization, and we conduct the research on our own and issue independent opinion. However, we advised the DAO for the conventional way of creating additional entries to the protocol. Perhaps developing extra interfaces would be beneficial here. But also disclosing alternative routes for accessing protocol is seen as a reliable mitigation measure against future regulatory actions. In the case with Curve, I assume with other major DeFi protocols, it is also achievable. Both DEX smart contracts or lending smart contracts, the governance modules, they can be accessed either directly via ETHScan, via command line interface, or via other protocols, governance aggregators, other venues that can give you access to the underlying smart contracts. If the project is not capable of developing many different front ends and incentivizing them, that, well, of course, can be interpreted negatively by the regulator. There are other avenues to interact with protocol in a relatively safe manner. That is the current state of developments as per the DFSA advisory. We cannot know what will happen by the end of the year when even more rigorous approach is expected by the European agencies.
I think just having one, let's say, online interface to access an underlying protocol could be potentially an issue, as you are saying, because if there's only one easy means of access, and by easy I mean that any person can just, again, access the interface in order to then access the underlying protocol, then that might be seen as, let's say, a single point of entry, if you will, which depending on what the underlying protocol is about, right? Because if, let's say, the underlying protocol is, let's say, essentially non-custodial nature in the sense that you're not actually depositing your crypto assets into a smart contract which might be controlled by someone else, then in that case, if, let's say, it's just being, let's say, served through one online interface, then there might be some room for worry. But again, it's not just about, I would say, the online interface itself. It's always also about what does it give you access to, as in, like, what can you access through the online interface as well. But I do agree that if there's more online interfaces to access the underlying protocol, then yes, that would definitely be a point of benefit, I would say.
Again, with, sorry for cutting, with the multiple interfaces, all the project developers should be mindful of how they incentivize building these interfaces. Because if the core team just launch 5 different entry points and still controls them, I don't see much of credible decentralization here. There should be a clear business model, I would imagine, for any independent entry point in order to have the valid claim that these user interfaces are not connected with each other.
What do you want to say something?
Yeah, something very quickly. Actually, as Jonathan was saying, like, it depends on the underlying service, but imagine if you are swapping tokens and you're charging a fee, and in the background you're just using like Uniswap or integration or something like this. In this case, you become a CASP yourself in a way. So it's you're reselling another regulated service and you become a regulated entity yourself. So it really depends again on what service you are reselling, but also some of the DeFi interfaces, in addition to the underlying service not being regulated, what they do is like the interface is not charging any fees, and there is a business test under MiCA. So if you're not charging any fees, it's difficult to argue like that you're doing it as a business, unless it's a sham and regulatory arbitrage created by the founders, but that's a different story. And the other one is actually that some of those interfaces, they actually just write a message for you to push on the network. So they just prepare like the code instead of you typing in the command prompt, whatever. So they are, in a way you can argue that they're just, what they do is they draft a message. They help you with like technical knowledge and language, something that you kind of lack as IT skills as a layman user. So in that way, like I would tend to think that those interfaces generally should be outside of the scope. And also in terms of like compliance, like we were entertaining a few ideas, honestly. Some of them was like creating a local client that you download to interact with the protocol. So it's not software as a service that you get, but you get your own like software licensed copy that you install on your computer and you interact with the protocol. And also, I know some of them were discussing also putting like interface on IPFS. Not sure how much good it's going to do, but it's probably a step in the right direction. And the other one, I heard actually about a protocol that allowed some of the interface, like you open source the interface and everyone can replicate it and put their own fee, like a small margin. And that's a way to incentivize this kind of decentralization. But I think with the Danish guidance, I'm not sure it's going to be a viable route because like, maybe you can pitch in and have a different opinion.
Self-controlled user tooling, user interface, if you like, is actually green-lighted by the current version of the FSA. However, this is an interpretation of a particular competent authority in a particular member state. We are not certain how it will be considered on a broader supranational level. And therefore, at least my expectations, I wouldn't say they are huge, but I'm cautious of what the competent authorities on the supranational level will drop by the end of the year, because it can significantly change the direction and limit the playing field of many protocols.
Yes, thank you for this. And I believe the audience might already have some questions. So if you do have questions, there are microphones. So please go there and ask it. And just before that, Svetlin, I will thank you for this clarification that basically we will see some expansion in the understanding of what DeFi probably is, provided by the European Commission, because in the text of MiCA itself, there are already provisions that are saying, okay, the Commission will basically work on the so-called MiCA 2, that would also put into the scope decentralized products and decentralization in general. But we are not sure what that means. The Commission is not sure what that means. So currently, if you read MiCA, you'll see that there is a deadline that they need to come out with this report. And the deadline is this year. And this would be fed by other documents and reports by the European Securities Markets Authority and the European Banking Authority. So those authorities already work on that. But the Commission would very likely delay the publication of this final report. There already, if you are following Twitter, there was this popular tweet for like two hours or something, saying, yeah, that report would probably come out in March because this is not a priority of the Commission. But honestly, we don't know that because we don't know what the priorities of the Commission are, because we don't even know what the Commission is currently. We don't have the commissioners set in place. So that would also play a significant role. But yeah, this will come eventually. The latest, let's say for now, at least the latest information is March, and it would bring more clarity around the interpretation on EU level what decentralization is and what might be, and this might lead to some changes in MiCA and so forth. But for now, we are left with the interpretations on member state level, because that's going to be the entity that is going to evaluate whether or not you need a license at the end of the day. So I don't think we have any questions. Oh, please go to the microphones, come on. It will, I think they will turn it, yeah. Turn it on.
Okay, Valentina, I have a question, very practical one. There are many exchanges which are operating outside the EU, in America or somewhere on islands, and they have their infrastructure developed for years and years, like really huge infrastructure. Apparently, they have some clients in the EU, and so far they are, and if presumably they don't have a VASP license as of now in EU, and they kind of operating in gray area, and for the future, when MiCA will be applicable, what are the options for those huge exchanges? Like, assumably, they even want to enter this market and be compliant with MiCA and all other regulations. How, with having all that infrastructure set outside the EU, what are their options? How they can start operating with MiCA and everything and be compliant? Are they supposed to split the infrastructure, or they can somehow to bring their existing infrastructure in compliance with the EU?
I can answer that question, yeah, as a centralized exchange person. So they always operated cross-border, especially the top-tier exchanges, they always operated cross-border. So when I worked for Crypto.com, there have been Hong Kong exchange operated across Europe. I think it's the question how some regulators interpreted, because there was this question as a exchange based in Hong Kong, do I advertise my services to clients in EU? And some regulators went, after some exchanges, they were fined, for actually offering services. We have at some point to offboard our Dutch clients because Dutch central bank came to us that you're offering your services illegally here on this territory. And we had the same issues with BitGet. BitGet is an Asian-based exchange providing services. So the argument the exchanges were using, they were saying it's reverse solicitation basis, and there is a paper, I think especially that comes with MiCA on reverse solicitation to make sure it's kind of clarified what exactly reverse solicitation. When we had to argue with some regulators that we are serving those clients in EU based on reverse solicitation basis, it was really hard to prove because our marketing department was advertising quite heavily in those jurisdictions. The app was in the local language. The website was in the local language, so the regulator would come to us that you're clearly providing your services in our territory, so you're fined 4 million euros, right? So I don't know how it's going to be with MiCA now coming. I think majority of top-tier exchanges, they already have European offices. They already thought about how they're going to apply for MiCA. And basically the European office is going to apply for MiCA, and they're going to use their MiCA license to provide services in EU territory. Maybe there are some other exchanges, smaller ones, that purely operate outside of Europe. I'm not sure what's going to happen with those. If they want to operate in Europe, they probably need to establish an office in one of the EU member states. I don't know if you guys have anything to add.
No, I agree. And also, the reverse solicitation exemption, I think ESMA had also said in one of its consultation papers on the reverse solicitation clause that it's more of a prohibition and that it's only going to be, let's say, availed of in terms of, again, who is actually allowed to operate under Article 66, if I'm not mistaken, in a very restrictive manner. So, in fact, testament to this as well, there's also the ESMA opinion, which was recently issued on dealer-broker arrangements as well, where there were a lot of prospective CASPs which were going to apply for a broker license under MiCA and then route their orders to their exchange entity, which is outside of the EU. And ESMA, rightly or wrongly, said that such kind of arrangements will not be allowed under MiCA. So this all goes to show that the intention of the legislator is really and truly to, let's say, not allow any provision of crypto asset service whatsoever targeting EU residents unless it's really and truly and objectively proven that EU residents are actively seeking the services of exchanges outside the EU, which have no efforts whatsoever in targeting the EU. So I think that's pretty much clear from the legislator's perspective.
So we only have 5 more minutes, and I see 2 questions, right? 2 people wanting to ask questions. Can you ask them right one after the other? Yeah, just ask all questions together.
I have a question
and then they will, the panel will
I have a question
answer.
for Diana. So what's the penalty for non-MiCA compliance? Do you have like fines? Is it jail times? Have they defined that? We have a sort of precedent. What happens if you don't comply?
I couldn't hear the question, so you're saying what will be the consequences of non-compliance with MiCA, right?
Yes, correct.
Yeah. Okay, so I think it's like non-compliance with any kind of other regulations, right? There will be a very strict supervision of implementation of MiCA requirements for every crypto exchange or any crypto company. And if it's not in compliance, there'll be, every regulator have a supervision department, so they'll be supervising how those MiCA requirements are implemented. And if they don't like something, they'll warn. The regulators usually first warn you. They don't fine you straight away. They issue around 3 warnings. If you still don't comply, they pass you to enforcement department, and this is where the enforcement comes in. And we expect some fines. We already seen some bad actors being driven out of the market from EU. So yeah, definitely they're going to be fines if they don't comply. I'm telling you this as an ex-regulator, Anas. Regulators are usually quite strict, especially those in Western Europe. It might be different, because the different regulators are different, right? I don't know how enforceable things are in Bulgaria. I don't know how strong is the enforcement department of the Bulgarian regulators. I've never heard actually Bulgarian regulators put in a huge fine of being somewhere on the news. I don't know, guys, you might correct me.
GDPR,
Yeah, I think,
under GDPR there are some.
Okay.
There were very minor fines for AML breaches under the VASP regime. Like I think for other companies, not crypto, but you can, get the trend. I think it was like 250 euro or something, like very minor fines. And this could be an attractive point to get a license in Bulgaria because the fines are going to be lower than some other jurisdictions.
Yeah, I actually heard from some companies and they approached me and they said, we operate in France, but can we apply for MiCA license in Bulgaria?
Yeah, you can, and you can passport. So.
You can passport once you get a license, but right now they want to apply for MiCA license, and I'm telling them, look, the regulator is going to examine you. They'll examine where your operations are, where is your office, where are all your people are sitting, and if they're all in France, they'll ask you a question, why are you applying? What's your reason for applying for MiCA license in Bulgaria? Then go and apply for one in France. So I'm kind of advising companies not to do it unless they actually open an office in Bulgaria and move some people here,
they need substance and at least like a chief compliance officer and whatnot. But yeah, by the way, tax is also good here.
And you can easily staff competent professional people, especially in compliance and risk manager.
Yeah, absolutely.
One more question. Unfortunately, the other ones would have to wait for the break. We will have all of us around. So yeah, go for it.
Hi, it's Elena. Thank you. This has been a great session. First of all, I wanted to say, and it's taught me quite a few things. One thing that I've been thinking a lot about is, to what extent do these MiCA requirements impact institutional businesses, right? Because, for example, a crypto exchange tends to be retail-focused. You've got retail customers. A lot of these MiCA obligations that apply to CASPs are really kind of aimed at retail. If you're an institution that wants to operate cross-border, but you are purely institutional, what does that look like in terms of compliance versus, for example, a big retail-focused crypto exchange?
Who wants to take this? Go for it.
Yeah, I think you still need to, like, if you are doing a CASP service, you still need to comply in a way. Like, of course, if you are dealing with consumers, you also need to comply with, like, consumer protection law. There is a lot of personal data floating around, so it's heightened. But generally, I think if you're doing a CASP service, even if it is on an institutional level, you would need a license. And otherwise, if you are trading with your own funds, you actually are probably not doing a service on behalf of a third party, so maybe you don't need a license. But yeah, Jonathan can probably pitch in here.
No, just want to mention as well that when talking about institutions, financial institutions and credit institutions enjoy certain, let's call them exemptions from MiCA, in the sense that credit institutions can offer all crypto asset services without requiring a MiCA license. And financial institutions, depending on the service that they are offering, they can offer that equivalent service as a crypto asset service without requiring a license under MiCA. So this does give them some degree of flexibility in terms of entering the crypto asset market. But essentially, like Vlad said, there isn't really that much of a distinction between retail clients and institutional clients under MiCA, broadly speaking. So essentially, it's not going to be, let's say, something that they have to cater for in a specific way if they're going to be mostly targeting institutional clients.
Thank you. So we will be around for all the other questions. And as we are out of time, unfortunately, I just wanted to end on a bit of a positive note. So each one of you, please share what you are excited about for the future trends. It might not be regulatory trends necessarily, but we're lawyers, so it probably would be. Just one sentence. What are you excited about, like in what's coming in the next months and year? We can start with Diana.
I'm excited about these new emerging products like DeFi, tokenization of real-world assets. It's a new product, still unregulated, so I'm looking forward to see how it's going to develop in the next 5 years.
Perfect. Svetlin?
I have two very, very quick
Of course, we are lawyers,
thoughts.
so it's never one thing.
One thing is the rapid intertwining between DeFi and TradFi, at least in my bubble. And the other thing that it's more like a wish rather than excitement, but I would really appreciate regulators to focus more on AI and other trendy stuff and leave MiCA all alone for the next 5 years, hopefully.
What?
I think, yeah, I'm excited about institutional adoption, getting into the market, and generally, like blockchain becoming more and more mainstream to an extent. So yeah, that's something I think I look forward to.
Jonathan, your take?
The US elections, because it seems like everyone is waiting for them before deciding what to do in the market. So I'm just waiting for those.
Thank you all. Thank you for this great discussion. You can find us. We'll be around. So yeah, I want to thank all the panelists and the organizers for giving us a whole hour. We sure needed that.